After years of strategy hopping, trying different systems, trying different mentors, I realized it was never the strategy. It was always my behavior that made me profitable or unprofitable. It was always my discipline. It was always my trade plan and my ability to manage risk. In the beginning, I was so obsessed with the perfect entry. I was obsessed with going for high Rs, 1 minute breaks of structure, 1 minute chalks, and going for 30 Rs. And then the odd one would land, but then you lose the next 5 or 10. The odd one would land, you lose next 5 or 10. And it just had no consistency behind it. After that wasn't working out, I started chasing every indicator under the sun, thinking that if I had a buy and sell signal, I would just make money so easy. Because it's really easy. The candles are green, it says buy. You can't lose money when you have an indicator, right? Wrong. What I didn't realize at the time is every profitable trader trades differently. You can give 10 profitable traders the exact same system. Let's say they all trade supply and demand, and all 10 of them can trade it completely different. Different analysis time frames, different things they look for. Some use wick breaks, some use body breaks, some need 2 breaks to enter, some need 1 break, some need imbalance, and everybody creates all these rules. Trading is so subjective, it has to be your own. And if you go strategy hopping for years, or you think you're gonna find this holy grail, I have really bad news for you. That's not gonna happen. For the most part, most people that know the basic technicals have enough from a technical perspective to get profitable. The next part you need to focus on is fundamentals, risk management, discipline, mindset, and really work on how you approach the chart. Did you do your Sunday night prep and get ready for the market? Are you up to date on all the fundamentals? Do you know what the interest rates are doing? Do you know what the rent folder news are coming out this week? The more prepared you can get, the better you're gonna do. And after I spent all this time strategy hopping, what I found is most strategies can work, not most traders. And that sounds bad, but what I found in this industry is a lot of people have the get rich quick mentality. And when you have the get rich quick mentality, the exact opposite happens. You start chasing bad setups, you start trying to trade every hour and every day and every week, and sometimes it's just bad price action and it's not worth trading. And you gain this knowledge over the years, but had somebody told me in the beginning that there was no perfect strategy, that you don't need to go spend, 10 grand, 15 grand, 5 grand, whatever you may invest in looking for this perfect strategy because it's marketed so perfectly, it doesn't exist. Everyone loses. It's part of the game. Any strategy can be made profitable. It all comes down to your discipline and your mindset. The real edge is consistency, risk management, and discipline. If I started over today, I would just focus on one strategy, one entry model, and I'd narrow it down to 3 time frames. I'd have a higher time frame, a middle time frame, and an entry time frame. So for example, daily, 1 hour, and maybe 15 or 5-minute entries. And I would just stick to that. I would not complicate it. And I know that with what I know today, it would only be a matter of time until I backtest it a little bit and I get comfortable with it and I know what strategy works on whatever asset I choose. Amateur traders, they chase perfect setups. Pro traders, they chase risk management. Can I reduce this loss into a half a loss because it's probably not going to work out? That's pro traders. Amateur traders, they'll let the full stop loss get hit every single time. The more professional you get and the better you get at this, the better you get at losing better. And when you become a good loser, you become a better winner. The goal isn't to make a bunch of money. The goal is to survive long enough for your edge to work, to survive long enough to learn, to survive long enough to stay in the game. Because I see traders come in, they over leverage, they overtrade, they blow their account, then this amazing price action comes for the next 6 to 8 weeks and they have no account and no money left to trade and they're all discouraged. And it's this repetitive cycle of them depositing money, them over leveraging, them over trading, and then the good price action comes and they just don't have any money or any confidence left to keep trading. So remember, the goal is to survive long enough for your edge to work, because any edge can be made to work. It doesn't matter if you're trading support resistance or SMC or supply demand. With the right set of rules and the right structure and the right discipline and the right risk management, you can make any strategy work. Don't let any guru tell you any difference. Anything can work. It really just comes down to what kind of rule sets you use and how much you're willing to follow the rules you developed. When I started, I was in a hurry to make all this money. I started out with trading gold with no stop loss, and I'd throw a few $100 in the account and I'd double it that day, I'd double it again the next day, and then I would lose it all the following day. And this repetitive cycle went on and on. After a few weeks, I learned about a stop loss, but instead of just looking for high probability trades, I thought I was gonna get rich quick. And a bunch of times I doubled my account, tripled my account, I withdrew the money a few times, I got really excited, but that was the wrong type of money making. I was making money gambling. I was not trading. And even when I started using a stop loss, suddenly it was like, 4 positions, 5 positions, 6 positions, and all of a sudden I'd make all this money when price went my way. As soon as price turned around, my whole account would be gone, and I'd be sitting there and mad, and the next day I'd repeat it again. And then all of a sudden when that didn't work, I'm like, okay, well, I need a mentorship. And I'd go through a mentorship. Okay, well, I'm still not making money. I better go to this one. No, I better go to this one. Well, this one's got cooler names. Well, this one's got cooler candles. This guy has an indicator. And everybody had a selling feature. But in the end, it really just came down to my own mindset and my own rules. If I started over again, I'd recommend something simple like a higher time frame support and resistance strategy. I'd recommend really strict rules, really strict risk management, and just really good discipline. Everyone overcomplicates trading. If you can keep it simple, you're gonna make more money than the guy that's overcomplicated it and the guy that's chasing these 30 Rs and 40 Rs, and I call them Instagram trades. They're not realistic. You have to make a realistic model that you can repeat consistently all the time. I was addicted to dopamine in the beginning. I was addicted to gambling. I wasn't addicted to trading. It took me quite a while to learn this, but the couple of small withdrawals I made in the beginning instantly hooked me. But in the end, I realized that if I can't do that week after week, month after month, quarter after quarter, it didn't matter if I doubled my account because the account wasn't there the next time I wanted to use it. And that's when I realized it didn't matter how much you made, it matters how much you're able to keep. It's easier to make 10 grand than it is to save 10 grand. And if you can get that through your head, you might just make a trader. And one thing I really want to reiterate, guys, is you're eventually going to hit a losing streak. When you get in that losing streak, and I actually hit one, 2 weeks ago, just recently, when you hit this losing streak, I want you to know that it's not about profits anymore. It's about just getting a good trade and getting some kind of profits out of the market. So for example, I was going for a 500 pip target and price got to a reactive zone that was only 250 pips of the way. I decided, hey, I'm gonna get my mental capital back and I'm just gonna put a win in the bag. I closed it out at 250 pips. Sure enough, that trade ran all the way to TP, but at that point it wasn't about money. It was just about getting a win on a good trade, managing it well, and showing myself, hey, I can do this, building my confidence back up because I know the market's gonna give me many more trades. One trade's not gonna retire me. Now, if this is hitting home for you, make sure you hit that subscribe button because I got 5 more brutal lessons that are gonna help you scale faster than the guy that didn't watch this. So if you're trying to learn how to trade NASDAQ and US 30 and Euro USD and GBP USD and gold and Bitcoin, I got bad news for you. You're not focused and you're spreading your energy into too many different things at once. A master of many things is a master of none. Master one pair, maybe 2. Now you actually have a chance at learning the asset, understanding how it moves, and actually making money. Think about it. If you were trying to trade 6 pairs at once, it's like trying to learn 6 languages at once. Would you want to learn 6 languages at once? No. You'd learn one, then you'd learn the next one. You wouldn't just try all 6 at once. It wouldn't make any sense. You'd get nowhere. Each pair has a specific personality. JPY pairs, they like throwing really long wicks. And as you trade them, you learn this. Gold, it taught me patience. I only trade gold. And one thing I know about gold is it likes to hunt liquidity more than any other pair. Or if you're trading NASDAQ or US 30, you have to understand that one company report is enough to crash the whole index fund for that day. If it comes out really positive or really negative, let's say Apple beat earnings by 25% or 30%, that's enough to move the whole market. If I had to start again, I'd start with 1 pair. The next thing I want to recommend, and this took me way too long to figure out, is keep a trading journal. Write why you took the entry, what your bias was, how you managed it, entry, stop loss, TP, and then go study that every weekend. Monday to Friday, did did this. Okay, Monday and Tuesday I traded really good. Wednesday I went against my bias because of FOMO. Thursday I should have sat out, but I chased price. Friday I did good. Next week you're gonna be like, I need to avoid days like Wednesday and Thursday, so here's what I'm gonna do. You might even add a trading rule or two to make sure it doesn't happen again. If you don't have a trading journal and you don't have your own data set, you won't know what to change. Your own data set is way more valuable than any course, any mentor, any boot camp, because that's your data. That's how you trade. That's how you see the market. And how you see the market is going to be different than how someone else sees the market, even if they trade the same system as you. Remember that. For years, I traded with no journal, no data, nothing to go off. And it was worse because I actually got some payouts from prop firms. But then all of a sudden, I was surprised when I'd get one payout and I'd blow the account and I didn't know why. And I'd just be like, oh, I guess it's the market. But I had no data to go back to and look and see why I failed. Was it the market or was it something I did? And I can guarantee you that if I had that data, it would most likely be something I did. Maybe a low probability setups, maybe over leveraging, maybe over trading when it didn't need to happen. Like there would be something there. It's important you have this data so you know what to change. Once I started journaling and going through it every weekend, everything changed for me. I stopped trading every day. I stopped trying to make money every day, and I just looked for higher quality setup, and some weeks I wouldn't even trade, and the funniest thing happened. I would make more money in half the trades that I used to take. How can this be? I didn't have as many losses to cover because I only took higher probability setups. So my psychology was better. My mind was always more clear, and I always made better decisions because of this. Less is more in this game. So if I started over from day one today, and I had to start trading again, I would journal from day one. Every trade, every emotion, every reason I overtraded or wanted to, every reason I wanted to over leverage or did, any reason, for example, I stretched my stop loss, took a bigger loss, I took an extra position when I shouldn't have. I would journal everything. The goal isn't to just hit buy or sell and trade. The goal is to understand yourself as a trader and understand your bad habits, because we're all wired horribly for trading. So we got to reverse engineer our own bad habits, and we have to be our own psychologists, and we have to fix them. The very first thing I want you to learn is how to manage risk. Don't over leverage. Know that you don't have to hit full stop loss. If you can learn to prevent full stop losses all the time, and as you get more experienced, you'll get better at this. I don't expect you to learn from day one, but today I would say 60 or 70% of my trades hit partial stop loss. Maybe only half, maybe a third, maybe 3/4. But over the year, I might have saved myself, maybe 40 losses in total by reducing my stop losses. Say you take an 100 pip stop and price is just coming against you aggressively and structure develops and it looks like it's going to run your stop. Let's say it's 50, 60 pips in. Why let it hit full stop loss? Take a partial loss, and if you don't think it's going to work out, you can always find another entry if it does. And if it doesn't, you saved yourself some pips. Sometimes I'm wrong and I exit a trade prematurely, but if the trade's still playing out, I can get back in. But I would say 2 out of 3 or 3 out of 4 times, I'm right to get out early and I saved myself a lot of pips. I saved myself so many losses this way over the year. Hey, I took a partial loss Monday, partial loss Wednesday, partial loss Friday. Wow, I just saved myself a whole trade and a half in losses. Now I have more pips to spare when a good opportunity arises. I used to think risk management was boring, but then I learned that it's the only way you stay in the game. Most traders size on greed, not logic. If you can get this down and only follow your trade plan, you're already ahead of 95% of the people in this game. And remember, you're up against some of the brightest, richest, most patient people in the world, and you're trying to take their money. In the beginning, they're gonna win, but if you can develop the same habits as them, you too can join them. But that takes years of discipline and risk management. I used to blow accounts in the beginning because I traded my feelings, not logic. I would trade my wants instead of rules. I didn't even have rules. Oh, that's a big candle up. I'm just gonna buy. What? What are you doing? Why are you buying? And in the beginning, I would say risk somewhere between 1 to 3% per trade. Never lose more than 2 or 3 trades in a day. There's just no need to. If you lost 2 or 3 days in a row, maybe it's time to take a break for the week and reassess and go over your journal and come back fresh next week and just go do some back testing. And when price is coming against you, never stretch your stop loss, never start adding more positions, never open your stop loss back up. You've already accepted that risk. Let it hit stop loss, reassess, wait 10-15 minutes, see if there's another entry. Maybe price is just manipulating, you're still right, or you're completely wrong and you just sit the price action out. You're not gonna get rich in one day. Stop trying to. In the beginning, I didn't even fail because I was wrong. I failed because I over leveraged. I took way too big of positions. And then when I got my position sizes down, I got too greedy and I just started taking too many positions at once and over trading. And that was the other side of the spectrum. You want to avoid over leveraging. You want to avoid over trading. I used to think that if I traded more, I would make more. It was the exact opposite. The more trades you look for and the more you try to trade, the more likely you are to lose. If I sit at the chart long enough, I will find a reason to enter a trade. Keep me at a chart for 9-10 hours. Oh yeah, that looks like a buy. Well, that can look like a sell. I can sell you any kind of bias if I get confused by the candles just from staring at them too long. So this is why you need an optimal time to trade. Find out when the volume's the best. Find out when your pair moves the best. Trade that time with a specific set of rules. What's structure doing? What's fundamentals doing? What is this more likely to do today? Well, it's more likely to sell. Well, it doesn't look like it's selling. Well, maybe my bias is wrong. I need to sit it out, reassess. Oh no, it's just manipulating. It's still selling. You always want to be patient with the market. You got to know when to be aggressive, but you got to know when to be patient. 90% of the time, you have to be patient. 10% of the time, you have to be aggressive. If you don't know when to be aggressive, you're not going to make money. And if you don't know when to be defensive, you're not going to keep money. And to make money consistently, you need to be good at both. Don't force trades every day. Don't FOMO. Don't trade because you're bored. Don't sit at the charts all day. If I started again, I would just focus on clean setups. I would look not to trade every day. If you're doing it right, you shouldn't be able to find a trade every single day of the month. There's no way. I don't care what asset you're trading. There's not a trade every day on any pair. If there is, you're not trading high quality setups only. You're taking mediocre and low probability setups as well. I'd rather take 2 or 3 A+ setups in a week than to take 20 random setups and still make money, but then realize that I would have made more money had I just taken 2 or 3 A+ setups because I didn't have any losses to cover. Remember, real pros are selective. You don't get paid for activity, you get paid for patience. The truth is, I wouldn't trade the last 5 years of paying for anything because it brought me here today, but I could tell you that had somebody guided me differently, I could have probably shaved at least 2 years of pain off my journey and probably got to the same place I am today in 3 years instead of 5. Every blown account, every sleepless night, every failed challenge, every time I got mad and wanted to quit, it taught me so much about the game and it made me respect the players in it so much more. When I realized who I was up against, I just realized you have no choice but to get on their level and perform like they do or you'll never make money. Most traders don't just fail trading because it's hard. They fail because they never learn how to control themselves and discipline themselves. I could show you how to do push-ups, but if you're not able to do those push-ups every day, no matter how bad you feel, it doesn't matter what I show you. Ultimately, it comes down to you to put in the reps. Now, if you want to fast track your journey, Momentum's put out a free course for everyone to enjoy. It's on YouTube. You can find it on this channel. You can watch the whole thing at no cost. You can join our Discord. You can join our Sunday calls, and it will help you become a better trader if you put the work in. I'm going to leave a link in the description for the course, for the Discord. Make sure you get in both. Watch the course. Change your life. You can do better than I did. I didn't have the guidance that I'm giving you guys. If this helped you, make sure you subscribe, and I'll see you in the next one.